Investing often feels like a roller coaster, driven by emotions like fear, greed, and impatience. Most investors lack the discipline to stick with long-term strategies amidst turbulent markets. But Stoicism offers a powerful philosophical framework to master emotions and take the long view. By integrating key Stoic principles into your mindset and process, you can invest rationally for the long haul regardless of volatility or hype chasing. Join me as we explore the timeless wisdom of Stoicism and how it applies to long-term investing success. You'll learn how to remain disciplined, control emotions, and tune out noise to invest skillfully over decades. Let's begin applying this ancient knowledge to help you thrive as an investor built to last. The benefits of adopting a Stoic mindset. At its core, Stoicism teaches we control our judgments about events, not the events themselves. How we perceive challenges and opportunities determines our experience. This empowers investors emotionally. Short-term price fluctuations don't drive returns long-term. Sound principles and process do. We stop attaching meaning to daily volatility. Stoicism also stresses focusing only on what we can control. Our actions, self-discipline, and determination. We strategically accept what we can't control, like market swings or other investors' emotions. Market volatility as natural enables even-keeled decision-making. We respond thoughtfully based on data, not just react impulsively. Stoicism further advocates mastering destructive emotions like greed and panic with reason and wisdom. This prevents self-sabotaging actions that undermine long-term plans. By taking a Stoic view, we realize profits and pullbacks are transient. Our worth isn't defined by portfolio value. We stay centered on process. Let's see how that translates into an investing framework and techniques. Crafting a Stoic investing strategy. A Stoic strategy focuses on building long-term wealth through owning productive assets purchased at attractive valuations. Key elements include a fundamental analysis. Perform rigorous research on a business's qualitative attributes and financials. Develop conviction in its quality and value creation potential over decades. Patience. Source have a 10. Wait to invest until price reflects a discount to informed estimates of intrinsic value. Don't chase overvalued fads. Make rational buys. Long time horizon. Plan to hold investments for 5–10 years. Give the fundamentals time to be realized in share price rather than trading short-term noise. Diversification. Construct a portfolio with reasonable asset allocation diversity to mitigate concentration risk. Combine equities, fixed income, cash to align with your risk profile. Investing. Reinvest dividends and other cash flows to compound earnings. Don't realize gains until assets become significantly overvalued. Let winners run. Infrequent adjustments. Make only occasional changes based on long-term shifts in fundamentals, valuations getting excessive, or portfolio rebalancing needs. Avoid leverage. Utilize leverage conservatively if at all. The amplified volatility can force emotional sales or margin calls exactly when opportunities arise. By crafting a strategy aligned with Stoic principles focused on value, patience, and long-term compounding, you create the bedrock for resilient investing. Executing with discipline, despite volatility. Adhering to a long-term Stoic strategy through bull and bear markets requires mental discipline. Here are key tactics to master emotions. Reflect on impermanence. When portfolio values decline, reflect on the bigger picture. Your holdings represent fractional ownership of real companies with long runways. Short-term price changes are relatively meaningless. Focus on what you can control. Rather than fixating on market volatility, direct energy into mastering the knowledge and behaviors within your control, security analysis skills, risk management, emotional regulation. Avoid letting desire rule. When greed tempts you to chase unsustainably high returns, pause and examine if your logic is sound. Don't abandon your strategy simply because others seem to be succeeding faster with speculation. Mute noise. Limit consumption of financial news commentary and other inputs that breed short-term thinking. Focus on company fundamentals and value, not the noise. Invest with margin of safety. Build in conservatism through diversification, position sizing and buying at reasonable discounts to intrinsic value. This helps ensure volatility won't devastate you. By regularly applying Stoic teachings to master emotions and biases, you avoid sabotaging your long-term plan. You remain committed to compounding through value, not chasing through speculation. Creating long-term success rituals. Ingraining Stoic practices into your routine cements disciplined mindsets as habit. Useful rituals include daily journaling. Write about your investing goals, principles, lessons learned. Solidify your values, knowledge, and purpose through regular reflection. Monthly review. Reevaluate positions. Have fundamentals changed? Is price aligned with value? Are goals on track? Reconnect to your thesis. Yearly check-in. Review portfolio allocations, risks, and strategy in totality. Does your plan still align with your needs and market conditions? Realign as necessary. Learn from mistakes. When you stray from your plan, review what triggered it: greed, fear, lack of conviction. Detail exactly what you'll do differently to avoid repeats. Deliberate practice. Set specific activities to continuously improve your security analysis, risk management, and psychology mastery. Pursue excellence, not goals. Plan for emotions. Envision how you may think and feel during difficult periods. Then script rational responses to stay centered, reviewing holdings, avoiding reactive sells, etc. Make these rituals habitual to keep your process, mindset, and knowledge sharp. Stay dedicated to daily practice and continuous learning above all else. Adopting Stoic teachings for investment success. By integrating Stoic wisdom into your investment endeavors, you gain an invaluable framework to thrive in all market environments. Volatility becomes your ally, not your adversary. Make developing rock-solid emotional discipline and process mastery your primary focus above returns. Aim your sights on 10-20-year wealth creation. Maintain perspective. Progress won't be linear. Stick with proven principles despite setbacks. Measure progress through behaviors, not monthly PL. With a Stoic approach, challenges become your training ground. Each one strengthens your composure, knowledge, and skill. Have faith in your practice. You cannot control short-term results, but you have immense power to master yourself and your actions. Do that persistently over decades, avoiding distraction by noise, and compounding gains are assured. So the markets will continue to fluctuate, but you will remain unwavering in your principles. While others get shaken out during periods of fear and greed, you stay the course steadily. That's the power of Stoic wisdom in investing. I hope these insights help you in your journey to long-term success. Let me know what resonated most in the comments. Remember to subscribe for more content applying timeless principles to financial markets. Now go invest with patience, discipline, and purpose. You've got this.